Hey guys, Susie here, and welcome back to Small Account Challenge 5.0. If you're new here, I'm documenting my journey growing a trading account from just $500 to $25,000 in 1 month by using a disciplined, focused, asymmetric compounding strategy. And today is Tuesday, February 18th, 2025. And it's the day after President's Day, and I hope you all had a wonderful holiday. Now, because my last trading day was Friday, Valentine's Day, February 14th, I was busy with my family and I didn't have a chance to upload the video from my day trade on that day. So in today's video, you're going to get a 2-for-1 deal. We'll cover trade number 3 from Friday, February 14th, and trade number 4 from today, February 18th, 2025. And make sure that you stick around to the end because I'm going to be sharing some juicy details, including a completely invalid false setup and how you can spot these so that you can avoid getting wiped out by them. Also, I'll be giving you special strategies exclusive to our group of traders and today's outcomes. And of course, I'll give you my key takeaways to help you in your journey. And as always, if you like what you see, hit that like button and be sure to subscribe to this channel for more free education on how to day trade profitably every single day. So let's dive in. All right, first, let's take a moment and celebrate some numbers. This past Friday, before I took trade number 3, my account balance was sitting at $3,824.69. And fast forward to today, after trade number 4, and we've hit $5,794.13. And let me say that again, $5,794.13. That's an insane 1,058% increase from the initial $500. Also, it's more than 11.5 times my starting balance in just 4 trades. The best part? Well, it didn't happen overnight. It happened because I stuck to my plan, I stayed disciplined and focused on executing proven strategies. That's what this challenge is all about. It's showing that with the right approach, you can grow a small account in very big ways. So let's talk about trade number 3, which I took on Friday, which was, again, it was Valentine's Day. The ticker was JTAI, which is a nanofloat stock, which had some short interest, and it was trading on breaking acquisition and AI-related news. Now, when you're dealing with acquisition news, that can create significant trading opportunities due to the heightened volatility and market interest. However, it's crucial to know exactly where the highly reactionary institutional levels are, and that's where our AI-assisted Discord alerts come in. It's a tool that I've developed and I teach in my mentoring program, and it's a game changer, guys. Here's how the trade played out. And it's going to surprise you, I think. At 7:07 a.m. Mountain Time, my AI scanner alerted my Discord members to JTAI. The stock was approaching a pre-market high of $6.70 on excellent volume for the pre-market. It had pushed hard through this critical $5.10 institutional level, which is plotted by our AI-assisted Discord alert, and then it pushed through that without even hesitating. And these levels, guys, are no joke. So whenever I see a push through one of these critical levels, I know that price will need to come back to it at some point and prove it as support for continuation. So to enter there would be really risky. There really was no sense in chasing price. So the goal for me was to wait for the pullback to this critical $5.10 institutional level. After the pullback to that level, that $5.10 level, price clearly proved it as support, and that's what I was waiting for. But because I was busy helping one of my members in the mentoring program, I was helping them with their trade setup. I actually missed this setup right here, the one that I was waiting for. And that occurred at 7:50 Mountain Time. And that's the candle where we had a very strong buy signal, which alerted us on our charts. But I didn't enter there because I was busy. And so I missed that move from $5.10 to the $7.20 target. And that would have been such a nice trade. But like I say, I missed it. And I knew I missed it. It was exactly what I was waiting for. Anyway, I think my frustration of missing that perfect setup, the exact setup that I'd been waiting for, that frustration got me a little bit. And I took an entry that I always tell myself never to take, which is this backside entry right here at 8:11 Mountain Time. This setup is always going to be a trappy trade, but this mistake gives me a chance to really show you something important, which most traders never see. And ironically, this is the exact setup that I was helping one of my members avoid. So it's ironic that I fell into it right after helping my member avoid the same sort of trap. Anyway, I want you to notice the price action when it made this $8.20 high over here at this 8:10 a.m. arrow. This is a false signal. The way you can identify a false signal in real time in this case is to notice this area of near-term resistance over here. Price literally was stuck right there, and it couldn't break above this range between $7.43 and $8.20. So this is going to be an area that price absolutely needs to set up above in order for continuation. And I knew that, but I was frustrated, and when I saw this buy signal over here, and even though it was a terrible signal, I entered right after it at 8:11 a.m. Mountain Time at $7.02. And my stop was just below this $6.85 institutional level. And my target was going to be this $8.40, at least so I thought. So I thought initially that my reward to risk made sense, right? But because I was frustrated and I was actually forcing a trade, I ignored the actual near-term resistance levels over here. And here's the thing, guys. Even though I had identified this setup as a false signal, I drew the chop box at this price that it needed to get out of. I drew that. And so I knew price needed to get out of there before there was going to be a valid setup. But I took this completely lame trade anyway, mainly because I was focusing 100% on a totally invalid reward to risk ratio. And I was basing my decision totally on that risk to reward ratio. But let me say that this risk to reward ratio, it only makes sense if the setup is valid. And this setup was completely invalid due to the resistance zone over here. So let me really break this down for you guys, because this is such a great lesson to show you. Nobody else teaches honest to goodness false signals to avoid like this. So the key here is to watch for where price passes through a target and then look for candle wicks that are just stalling. They can't break above a certain level. And this 9 EMA will actually show you the bottom of the chop zone, where it angles down after trending up. That's going to be your near-term resistance level and the base of this chop zone. So that's why I shaded this box here. So in a case like this, the reward or target is not going to be $8.40, but instead it's going to be the base of this chop box here, which is actually at $7.33. And my rule is the reward needs to be 3 times the risk. So with this setup, the risk was 21 cents, the reward was 31 cents. So this trade makes absolutely no sense. The risk doesn't justify the trade. Anyway, after I entered, I was seeing price action stall inside this zone, and it could not break out of it. So I sold my shares at $7.18, and I managed to squeak out a little bit of profit. So it wasn't a total loss, but still, because I'm doing a small account challenge here, that lame trade took all of my available capital for the entire day, so I couldn't take any more trades. What I made on this trade was all I could make for the whole day. But here's the thing, guys. The reason this trade wasn't a flat-out loser was because I knew in advance where the institutional levels are. And I knew that when price failed at the $7.20 institutional level, I needed to sell pronto. And that's why I sold at $7.18 and was able to stay green. Guys, these levels mean business, and they are flat out no joke. So if price fails at one of these levels, these horizontal lines, that's a big signal that trend may be reversing soon, and now is the time to get out green, even if it's only a small profit. Now let's fast forward to today's trade. Trade number 4. The ticker was SLDB. a low float stock with an underwriting offering as well as clinical trial news. Our AI assisted alert in Discord triggered at 5:19 a.m. Mountain Time. And if you're unfamiliar with how underwriting offerings influences momentum for day traders, well, this is a special kind of offering. It's similar to an IPO or a secondary offering, but the underwriters, they often stabilize the stock price to prevent extreme volatility. So for day traders like us, liquidity is very high. And that's why we saw such amazing volume on this during pre-market. But the key to remember is underwriters can sometimes manipulate price. So that means you absolutely need to know where the institutional levels are, meaning you need to know ahead of time where institutions will be taking their positions and exiting their positions. And that's where our AI-assisted alerts in our private Discord channel come into play. This very special one-of-a-kind alert gave us, in advance, exactly where the institutions plan to take their positions and exit their trades. This is key because this tells us in advance where price would go and stop. So this trade then became a matter of entering at the alert and following the trend to the target, allowing volume to confirm each level. And what that entails is simply monitoring buyer volume to confirm that it continues to increase along the uptrend, all the way to the target. And this is exactly what I teach my members in my Discord group, exactly how to trend trade for maximum profits on each trade. So here's how it unfolded. At 5:19 Mountain Time, the AI scanner flagged SLDB. And here's what stood out. The stock was in a strong uptrend, holding the 9 EMA on the pullbacks, with volume exploding. I entered at $5.40 at 5:19 a.m. Mountain Time, as it was proving support at the $5.35 institutional level. My initial stop loss was just below this $5.35 institutional support level that our Discord alert gave us. And as you can see, price surged all the way to $8.41, and I sold all of my 724 shares into strength at $8 for a profit of $1,882.40. This trade only lasted just 9 minutes, but it reinforced an important lesson. Understanding critical institutional levels, volume, float, and momentum can help you maximize opportunities on these types of stocks and this type of news. All right, let's talk about what you can learn from these trades. Knowing institutional levels is a game changer. Big money moves the market, and institutions have specific levels where they enter and exit. If you know them in advance, you have a serious edge. In this trade, the AI alert flagged $5.35 as an institutional support. So that's where I took my entry. Number 2, understanding how offerings impact day trades. Unlike regular offerings, underwriters step up to stabilize the price, which keeps the stock liquid and tradable. But there is a catch. They can also manipulate price action. So you've absolutely got to know what's happening behind the scenes, and you've got to know their key levels. Volume confirmation is everything. Just because a stock is running doesn't mean it'll keep going. You need buyer volume to confirm the trend. In this trade, the stock kept holding the 9 EMA on pullbacks, which was my signal that momentum was still strong. Number 4, low float and momentum equals explosive moves. SLDB was a low float stock with a catalyst, which was clinical trial news, which is the perfect recipe for a fast-moving setup. When you combine a low float, high volume, and strong uptrend, that's when you get those big breakouts. Number 5, trade execution. Here's the simple blueprint. The AI alert at 5:19, institutional levels, institutional support at 5:35, entered at 5:40, giving us a very tiny risk, and then the stock ripped to $8.41. Selling into strength at $8, locked in profit of $1,882.40 in just 9 minutes. So what's the key? Enter at a strong level. Let volume confirm and exit while there's still momentum. This trade was a great example of why understanding institutional levels, float size, and momentum makes all the difference. Remember, trading isn't about catching every move. It's about the right moves with a solid strategy. And that's a wrap for today's video. I hope these recaps gave you some valuable insights into trading with a smaller account. And if you found this helpful, click that like button and be sure to subscribe to this channel for more free day trading coaching and help along your trading journey. Now, if you're serious about becoming a top-tier day trader and achieving a 90 to 95% win rate on all of your trades, this is your chance to join my Pro Trader mentoring program at MomentumStockTraders.com. As a member, you'll get access to custom tools, just like the AI-assisted Discord alerts that have all of our institutional levels right there with them, so that you can trade in advance knowing exactly where price is going to go and stop. You'll also get the real-time alerts and live guidance on every single trade we take every day. Plus, you'll be part of an amazing community of traders who are just as dedicated as you are. Together, we'll work on strategies and setups that'll help you hit your profit trading goals every day. So thanks so much for watching and spending a few minutes with me today. Happy trading, and remember, stay focused, stay disciplined, and let's keep growing those small accounts together. And I'll see you in the next video.